Hi everyone, and welcome to financialsavvyme.com. So today we're going to talk about the tax-free savings account. Tax-free savings account, if you guys don't know, here in Canada we have an account that's called the tax-free savings account, and this account was created back in 2009 by the Canada Revenue Agency in order to help Canadians save, basically. This account is 100% tax-free, so it helps you grow your savings much quicker. It allows any eligible Canadian to save money and earn as much interest as possible while not having to declare the interest earned or pay taxes on it. So if you're interested in that kind of content, you subscribe to my channel for more of these tips and tricks in the future. So let's get started. What's the difference between the tax-free savings account and a regular savings account? So basically, the main difference between the tax-free savings account and a regular savings account is the taxable interest. Interest earned in a savings account is not tax-free. So that means that you have to declare any interest earned in a savings account and pay taxes on the amount as it's considered investment income. While you can deposit and withdraw as much money as you want from a regular savings account, the same can't be said for the tax-free savings account, and we will discuss this further. Because the tax-free savings account is regulated, right? There are contribution limits, and we will talk about that later. There's a limit to the amount of money that you can deposit into a tax-free savings account. You can withdraw as much money as you want from a tax-free savings account, but you can't contribute any amount that you want, and we will talk about this later. So who is eligible for the tax-free savings account? To qualify for this account, you need to be a Canadian resident, be at least 18 years of age, and have a valid social insurance number. A non-resident with a valid SIN can open a tax-free savings account as well. However, any contributions made into the account while being a non-resident are subject to a 1% tax for each month the deposits stay in the tax-free savings account. So if you want to know more, if you are a non-resident and you want to know more about this, I strongly suggest that you contact the CRA or you visit their website. You will have more information on that. So what's the contribution limit and what are the contribution limits? So basically you will accumulate tax-free savings account contribution limits or contribution rooms for each year, even if you don't file an income tax return, or even if you don't open a tax-free savings account. And like I said, the tax-free savings account was created back in 2009. So if you were eligible at that time, if you were 18 years of age and if you were a Canadian resident, then you were eligible to contribute. And if you've never had a tax-free savings account before, you can now go ahead and open a tax-free savings account and contribute any amount that you were eligible of depositing starting in 2009. Okay, so in 2009, as you can see, the contribution limits the contribution limit was $5,000. In 2010, it was $5,000 as well. 2011, $5,000. 2012, $5,000. In 2013, it was in 2013 it went up to 5,500. 2014 as well, 5,500. In 2015, it went up and you could contribute $10,000. In 2016, it went down and you can only contribute 5,500. In 2017, it was still 5,500. 2018, 5,500. In 2019, the contribution limit is $6,000. So if you've qualified for a tax-free savings account since its inception, meaning since 2009, and you have never held one before, you could deposit $57 $1,500 in the year 2018. Okay? Now, each time you deposit funds, it counts as a contribution, regardless of the total amount in the account. Okay? So for example, so if you deposit $1,000 and then withdraw the $1,000 and deposit it again in the same year, you are considered to have contributed $2,000. Okay? So like I said, so when you withdraw from a tax-free savings account, you can withdraw from your tax-free savings account at any time, but what you need to be careful about is withdrawing and then redepositing an amount in a tax-free savings account if you've already contributed your maximum. You need to be careful about that because you will be taxed if that happens, and you will get a letter from the CRA, and we will talk about that later. So the good news is that you can withdraw as much money as you want for the tax free. So like I said, but the amount that you withdraw, you can only recontribute into a TFSA in the following year if you've already reached your maximum allowable contributions, right? So you can move your tax-free savings account from one financial institution to another. However, when you do this move, make sure that you fill out a form that's called a T2033 that allows you to move your tax-free savings account and not withdraw it and redeposit it. Because like I said, if you withdraw it and redeposit the same amount and you've already contributed the maximum amount that you were allowed to contribute, if you do that, then you will have over contributed and you will be taxed. You will be penalized by the CRA. So what happens if you over contribute? So if you over contribute, what will happen is that you will get a penalty. You will get a 1% penalty tax on the over contribution amount in the month. And that's for each month that the excess amount remains in the account. So as soon as you realize that you have over contributed in your TFSA, the best thing to do is just to withdraw the amount that you have contributed and make sure that you don't deposit it back until the following year where you have more contribution. Okay? So the bottom line here is that the tax-free savings account is a great way to save for any type of goal. The only thing you need to watch out for is the contribution limits like we talked about. So make sure you don't go over your contribution limits and start your savings journey for better financial stability. If you have any questions or any comments, you can leave them in the comment section below. You can check the description box for other resources. And as always, don't forget to subscribe to my channel and like this video if you found this helpful. You can also visit my blog at financialsavvyme.com if you want more information or other articles that you can check out. Again, thank you for watching and have a great day.